Hello everyone and thank you for joining. My name is Dustin. I'm one of the co-founders and CEO of the Chipline Trading Group. Over the past years, we've worked with EMS companies, manufacturers, and procurement teams across Europe who all face the same challenge. Semiconductor supply never stays stable for long. One year, we have massive shortages. Then the market relaxes and suddenly signals start appearing again. Prices begin to move, lead times start creeping up. Orders that looked secure suddenly become uncertain. And if you're responsible for procurement, you probably know exactly what it feels like. Production planning becomes stressful, engineering is asking, and the difficult part is, most of the time, these changes happen quietly at first. Today, I want to walk you through what we are currently seeing in the market, not as a sales presentation at all, but as a short market briefing from the field. What signals are appearing right now? Why prices and lead times are moving again? And most importantly, what procurement teams can do to reduce supply risk. Let's start with what we will cover. This will be a focused 20-minute briefing. My goal is not to cover everything in the semiconductor industry. Instead, I want to focus on the signals procurement teams should pay attention to right now. First, we look at the current market indicators. Because shortages never happen overnight. They usually start with really small shifts. Prices move in specific categories, lead times start stretching in certain segments, and order stability begins to change. Then we'll talk about prices and lead times, why some categories are moving much faster than others, and why the memory market is currently one of the strongest drivers. After that, we'll discuss something many procurement teams experienced during the last shortage: order cancellations. Even confirmed orders sometimes disappear, not because someone made a mistake, but because of how the semiconductor supply chain is structured. Then we'll talk about the limits of traditional distribution, companies like DigiKey and all the partners. But the inventory is still limited by what manufacturers allocate to them. And finally, we look at procurement strategies, what companies are doing today to make the supply chain more resilient. Let's start with what we are currently seeing in the market. One important point first, there is no single signal that tells you a shortage is coming. In semiconductors, it's always a combination of indicators. Right now, we are seeing three developments happening simultaneously. The first one is price pressure, most visible in memory, RAM, NAND, and SSD related components. But we also see selective price pressure in analog devices, power components, and automotive grade semiconductors. The second signal is rising lead times. Not everywhere, but in some product families, delivery windows are slowly extending again. And procurement teams usually notice that first, because suddenly the quote that said 18 weeks last quarter now says 26 or 30. The third signal is order uncertainty. And this is something we hear more frequently again. Orders that were confirmed earlier suddenly get delayed or partially even cancelled. And when all these three signals appear together, prices, lead times, and order stability, that usually means the market is entering a more volatile phase. Not necessarily a crisis, but a phase where procurement becomes more complex again. Let's talk about prices, because price movements are usually one of the earliest signals that something is in the supply chain is starting to shift. Right now, we are seeing very different dynamics across different semiconductor categories. The strongest price pressure is clearly in memory. DRAM, NAND, and SSD related components have seen some of the most aggressive increases. In certain cases, we're talking about price movements of 90% or even more compared to the lows of the last cycle. But outside of memory, the situation is more nuanced. In automotive microcontrollers, certain analog components, and power semiconductors, we are seeing more selective price increases. Not everywhere, but in specific product families where demand is recovering faster than supply. And there are three main reasons behind this. First, end market demand is recovering. Industrial and automotive sectors in particular are picking up again. Second, production costs are increasing. Energy, materials, wafer processing, all of that has become more expensive over the last past years. And third, allocation priorities are shifting again. When capacity becomes tighter, manufacturers naturally prioritize their largest strategic customers. And this is something procurement teams know very well from the last cycle. During the shortage years, purchasing teams had to perform almost impossible tasks, finding components that simply didn't exist in distribution, keeping production lines running despite extreme constraints, And honestly, that work often doesn't get enough recognition. Because when procurement does its job well, nobody notices the crisis that was avoided. But inside the company, everyone knows. Without strong procurement teams, manufacturers would have stopped. Well, now let's look at lead times. Lead times are often one of the most practical indicators for procurement teams because they directly affect planning. Right now, we are seeing lead times increasing again in certain segments, especially, as I said, in memory, analog ICs, and some automotive components. In some cases, delivery windows are already reaching 30 to 40 weeks. And compared to 6 or 12 months ago, that's an increase of roughly 15 to 25%. Now, that doesn't necessarily mean we are heading into another shortage, but it does mean something important. It means that margin for planning errors become smaller. If demand forecasts change mid-cycle, procurement teams suddenly have far less flexibility. And this is exactly when many companies ran into problems during the last shortage. Forecasts looked stable, orders were placed, and suddenly lead times doubled. So one of the most important lessons procurement teams learned during the last cycle was lead times should never be treated as static numbers. They're dynamic, and they can move much faster than expected. One topic that always causes a lot of frustration among purchasers is order cancellations. Many procurement teams experienced situations like this. You place an order, you receive confirmation. Everything looks totally secure, and suddenly, weeks later, the order gets delayed or even partially cancelled. And the natural reaction is, how can that happen if the order was confirmed? The answer lies in the structure of the semiconductor supply chain. This industry is extremely layered. Manufacturers allocate wafers, distributors allocate inventory, and OEMs, they demand shifts. Forecasts change, and sometimes a change at the manufacturer level ripples through the entire chain. For example, a fab adjusts production priorities, or yield issues reduce output, or a large OEM increases its demand unexpectedly, and suddenly supply has to be redistributed. And unfortunately, that redistribution doesn't always reach every customer equally, which means that even confirmed orders can sometimes be affected. One case that we actually see happening way more at the moment is with our customers as well. They tell us like, no, I ordered like with DigiKey already. And suddenly 3 weeks later, they call us and say like, no, I don't know why, but DigiKey canceled the order. And that is something that has not happened that much last year, but this is happening like every 2 weeks now. So this is another signal that we are currently seeing. Authorized distribution starts to cancel orders at the moment. And that brings me to the next point, because let's talk about something that every procurement team relies on, and that is authorized distribution. Companies like DigiKey, Mouser, Arrow, they are the backbone of the semiconductor sourcing. For many organizations, they are the first and most trusted channel. And in normal conditions, that works extremely well. You have visibility, you have pricing transparency, you have predictable delivery structures. But the semiconductor supply chain has one structural characteristic that becomes very visible when the market tightens. And this is distributors can only sell what manufacturers allocate to them, which means the inventory is not fully independent. It is directly linked to upstream allocation decisions. When manufacturers reduce supply to distribution, even slightly, the effects can appear very quickly downstream. Many procurement teams experienced exactly that during the last shortage. 1 week you could still see inventory available, the next week everything showed zero stock. Lead times suddenly jumped, and suddenly the sourcing strategy that had worked perfectly for years no longer worked. And this is often a difficult moment for procurement teams, because inside the company, people start asking questions. Why can't we just buy the part? Why can't we simply order from the distributor? But those who have worked in semiconductor sourcing for years, they know the answer. Because when allocation starts upstream, even the largest distributors cannot change the reality. And that is not a failure of distribution. It's simply how the semiconductor supply chain is structured, which means procurement teams eventually face an important strategic question. What happens if the primary sourcing channel temporarily stops working? And that question is exactly what led many companies to rethink their sourcing models after the last allocation cycle. Now, this brings us to one of the most important lessons many companies learned during the last shortage. And that lesson is resilient procurement cannot rely on a single sourcing channel. For many years, the model was relatively simple. You had the manufacturer, you had authorized distributor, and that was usually enough. But the last allocation cycle showed something very clearly. When supply becomes tight, even the largest distributors depend on what manufacturers allocate to them. And if allocation shifts upstream, inventory disappears downstream very quickly. Many procurement teams, as I said, experience exactly that situation. You log into the distributor platform, everything shows out of stock. Lead times suddenly jump from 60 weeks to 52, and engineering is asking the same question every day. When will the parts arrive? So the companies that navigated the shortage best were usually the ones that had multiple sourcing layers. Not instead of distribution, but in addition to it. Distribution still remains the foundation. Manufacturers remain the primary source. But additional sourcing layers can create something extremely valuable: flexibility. For example, OEM partnerships, EMS network inventory, and the independent semiconductor market. Now, the independent market often has a bad reputation, usually because of concerns about quality. But when it's combined with the right processes, which are supplier qualification, incoming inspection, traceability, and optional third-party testing, it can function as a controlled risk buffer. And that buffer can make the difference between a production line stopping or a production line continuing. And in procurement, sometimes that difference is everything. So the question that many procurement teams ask today is, what actually works in volatile markets? What separates companies that constantly struggle with shortages from those that manage to navigate them much more smoothly? From what we observe across many organizations, 5 practices stand out. The first one is dual sourcing. Critical components should never rely on a single supplier whenever possible. Even if one supplier is preferred, having an alternative already qualified can save months of disruption. The second is early planning. Many procurement teams today extend their sourcing horizon far beyond the official lead time, because by the time a shortage becomes visible to everyone, it's usually already too late to react. The third is strategic safety stock, not across every component, but specifically for parts that could stop production entirely, because sometimes the most expensive inventory is the inventory that you don't have when you need it. The fourth practice is continuous market monitoring, tracking lead times, price signals, allocation changes, and manufacturer announcements. Not once per quarter, but continuously. And the fifth is flexible sourcing networks. Companies that maintain relationships across multiple sourcing channels are significantly better positioned when it comes to allocations. And interestingly, many of the strongest procurement teams have moved away from purely transactional sourcing. Instead, they focus much more on building networks and information flow, because in volatile markets, information often becomes just as valuable as inventory. Let me close with 3 key takeaways. The first one is this: the semiconductor market will always remain cyclical. Volatility is not an exception in this industry. It's just a part of the structure. Demand changes quickly. Capacity adjustments take years. And that imbalance naturally creates cycles. The second takeaway is disruptions often appear gradually and then accelerate very quickly. At first, it's just small signals, a price increase here, a longer lead time there, and an order that suddenly becomes uncertain. But once several signals align, the market can move much faster than expected. And the third takeaway is probably the most important for procurement teams. Flexibility reduces risk. Companies that combine multiple sourcing channels maintain visibility into the market and build strategic buffers that are significantly better prepared when supply tightens again. Before we finish, I also want to say one thing to the procurement professionals listening today. During the last allocation cycles, purchasing teams carried an enormous responsibility, keeping production running, finding components in extremely difficult markets, solving problems that often seemed impossible. And in many companies, their work was absolutely critical, even if it wasn't always visible from the outside. So if you were part of that effort, you probably saved your money from far bigger disruptions than most people realize. And finally, if you're currently facing sourcing challenges, you have overstock, you have questions about the market, you want to have some parts where you think, I might cut costs a little bit on this one, or you simply want to exchange perspectives on what you're seeing in procurement right now, please feel free to always reach out to me directly. I'm always happy to speak with procurement teams, discuss real supply chain situations, and see where we might be able to help without any obligation whatsoever. Thank you so much for your time today.